Hello again, everyone. Welcome back to another episode with the Economic Prepper, otherwise known as Jeff. How you doing? I got a lot to talk about today. I want to talk about where banks are going. What happens if the Fed is no longer here? Like I say, I post a lot on Twitter to say end the Fed, and a lot of other people do. But the question has to be asked: what happens if there's no Fed? What's happening now is an alternative banking system is being constructed because they are going to tear down that central bank. And let me explain what I'm seeing, what's happening, why this needs to happen, and I'll try to do it all in 10 minutes or less. So thanks for joining me. Let's get right to it. There's a tweet that I shared out recently for the new SEC chair. I do not know his name, but he stated that a commission-wide initiative to modernize the securities rules and regulations to enable America's financial market to move on chain. That was the quote from him. Now, what does that mean? Now, obviously, like these guys talk and they choose their words very wisely. But when you say on chain, that means blockchain. That means we're going on to blockchain. And when deregulation from the SEC means we're going on to blockchain, and you talk about America's financial system, that's banking. So what that means is we are building decentralized finance, or DeFi. That means the traditional banking of seeing a Chase or a Wells Fargo or PNC, name a bank on your corner, that's going to dwindle down and potentially die away. Now, why is that a good thing? Well, let me explain some things. And there was an interview with Richard Werner on the Tucker Carlson show. It was over 2.5 hours long. I found it fascinating. Most people probably find it extremely dry and boring, but I was riveted because it was history and finances. So I went all into it. I've got a couple of comments to share and some graphs to share, and I'll post them on X and other places in the links of the description or below the post. But decentralized banking is going to lead to more banking options for you and for me, which is going to be a boom to the economy. Now, let me pull up a couple graphs, and I'll explain to you that what Richard told Tucker was that one of the reasons that central banking is bad, not just because they control everything and have it all centralized, all the big banks go back to the central bank. And the central bank likes to have fewer and fewer banks because it's easier to control fewer banks. The problem for Americans in the economy is that when you get to mid-size and bigger banks, they all want mid-size and bigger deals, which means the average borrower or the small business is not going to have anywhere to turn for a loan right now, and that's crushing the economy. So let me pull up a couple of pictures to prove this point and tell you what's been happening in America for the last year. And I did not connect this dot until I listened to Richard Werner, and I'll save you the 2.5 hours. It's really good if you really want to watch it, but both sides of the war were funded by the same family. That kind of stuff is in there, which is really interesting to watch. The Wagner brothers, it's very interesting to hear about that. One of them was involved with starting the Federal Reserve. But all wars are bankers' wars, and they fund both sides so that they make a profit either way because they're funded by debt. They borrow from the central banks. If you've seen Game of Thrones, you saw that part with was it the Iron Bank? I think that was what it was called. Correct me if I'm wrong. Leave in the comments below. But let's get back to it and stay on track here and try to wrap this up within 10. All right. So the first graph I'm going to pull up. This is the source. I will share the source as well. But this is the number of banks since the 60s to around 2017 or so in the United States. Let's move it up here. Now, obviously, it's reversed. I think it's reversed, but much higher in the 60s than in the 2010s. Now, what has happened since then? Well, I went and found another source, and let's pull that up here. So the number of banks since the 2000s, right? So there were over 15,000 banks in the 30s. FDIC got launched. There was fewer than 10,000 banks in 1995. There was less than 5,000 banks as of 2022. In the year 2000, they had about 8,300. They got down to less than 5,000 banks in 2022 after a lot of shutdowns, as you know what I'm talking about. And now there's less. There's still 4,500 banks. So we've had a decrease in the number of banks by a factor or two or more. What that means is there's less local connections to the community. There's less loan officers locally to make smaller loans and to add liquidity into the system, because how it works, how the banking system works, banks create liquidity by making more currency. The way that they do that is they make a loan. So if I'm Banker Smith, and Banker Smith says, "Hey Jeff, you want to borrow 50 grand to buy a car? Great, sign this paperwork, all that fine." They put $50,000 into your account. That's a number. It didn't exist anywhere. And then they take that paper, that document you signed, and sell it to someone else, and that's where they make their profit. That's not happening very often anymore, both because the number of banks is smaller, and also because the loan climate and the banking climate right now. So what they're doing is they're decentralizing the banks. They're going to make it all on the blockchain, and then you'll still have, like, you may have bank fronts or physical presence or local places to go, probably at a grocery store or something like that, for people that are used to walking into a bank. There'll still be ATMs, but a lot of the stuff like Chime, PayPal, Venmo, Zelle, a lot of stuff is going to become, like, they're going to mimic those things, because the easiest way to get things to be adopted is to have them become, like, or emulate, mimic current behavior. So they're going to get that on there. They're going to make that happen, and then you're going to decentralize banking, and that's going to lead to more competition, more loans, more liquidity into the system, and you're going to have better rates, and everybody's going to win, because the central bank will go away. The banking will move primarily to be online versus physical presence, and your Wells Fargo and your Chase banks in the corner. And a lot of the manipulation that those banks do behind the scenes that you don't even know about, with their derivatives and their options, that'll all go away with the central bank, and that system will go and wither and die. The new system we build up, and that's how it's going to go, and that's how I see it happening. But in order to see this kind of picture, you have to understand blockchain, banking, computers, and some politics too, and it's the history of the Federal Reserve. So I can see why most people don't see this, but I wanted to put this out there so that people understand that banking is moving online onto the blockchain, which will add for more transparency, add for more liquidity, add for more people having access to it, and you won't have to worry about going to these big banks that are going to turn down most loans and not add liquidity to the system. So that's how rates are going to come down. That's how loans are going to go up. That's how more money is going to be injected to the system, currency injected to the system. And that's how I think it's going to go. So what are your thoughts? Leave a comment down below. I'll check out everyone. Oh, and by the way, I am filming on my phone. This is my business phone. If you need to reach me, 240-517-6051. For interviews, consulting, I have a Calendly if you want to set up an appointment too. But time is precious, so I do have to charge for certain things. I do a basic conversation for introductory call, but time is money. And but if you need me, if you want to have a conversation and go deeper than I do in these videos, more power to you. I welcome that. And again, it's 240-517-6051. See you next video. I'll read every comment. Talk to you soon. Take care.